The material discussed in this program is for information purposes only. It is not intended to be used as a recommendation for investing or as legal advice. Each person has his or her specific situation, circumstance, and objective, and should consult their own personal advisor or counsel. Thursday morning here on KSJE, and it's time to check in with Jason Calcote from Citizens Trust and Investment Corporation, who's been watching the markets for us all week. Jason, good morning.
Good morning. How are you?
I'm good, thanks. Thanks for being with us. And the Fed making some news recently, right? As soon as yesterday, I guess.
Yep, they did. They announced that they were going to be patient with the rate hikes going forward, and the market really responded to that. I think everybody was a little bit nervous about how quickly they raised them last year, and then the response from the investors. Really.
Sure.
We had a really bumpy fourth quarter, and I think that had a lot to do with it. There was a split decision to do that fourth rate hike, and yeah, I think that they're coming out, and it's a little bit of a more dovish approach, and it's paying off.
Right.
Investors are happy to see that.
People are looking at the words that he used, the Fed chairman, in his remarks, I guess, about the decision, right?
That's
and the
right.
word patience really got their attention.
Yep, patient was in all the headlines. That was the trigger word of the day, and yeah, I think it was a good use of the word and being able to communicate that to the investors. And
right.
I think, yeah, we're starting off this year very positive.
Right. Markets have responded accordingly, I suppose, right?
Yeah, they have. There's been some big moves in the market. I mean, it was way up yesterday. Another one of the major players that was up yesterday was General Electric. Their stock price really soared yesterday. It was up about 9%. And that's coming off of comments from the new CEO. GE was really mixed up in that subprime mortgage debacle about a decade ago now.
The Great Recession,
yeah,
right? Yes,
2008.
exactly.
Okay. So they've got the Justice Department kind of, they've come up with a plan on how to move forward and settle with that. It looks like it's going to be about a $1.5 billion settlement on behalf of GE. So moving forward is a good thing. And then last year, the new CEO had mentioned that he was going to cut dividends, which is odd for that type of stock. So we really had a tough year for GE last year. They tumbled about 57%, but this year we're up about 20%. So yeah, positive moves. It looks like they're going to, help with their cutting their debt, and then they're going to settle the subprime debacle. So they're going to improve the liquidity and reduce leverage. So all positive stuff for GE.
Okay,
which is great.
Well, and years ago that was one of the stocks to have, I think, in your portfolio, and maybe it still is today. But I don't think it's quite as good as it was, maybe, with its history.
And I think that was part of the negative reaction on the dividend comment. I mean, people buy this type of stock specifically for the dividend,
right?
And to say that you're going to slash the dividend, I think really took a lot of people by surprise. And you're right, it has been a stock that's been in portfolios for years. This latest slump was the worst one in 127-year history of the company. So yeah, we're climbing back out of there.
They've been traded for a long time.
Yeah, they have.
Interesting. And so with all this news, the markets are responding
the markets are responding well. We've still got some uncertainty up in the air, though. We've still got China making headlines.
Right. Okay.
The president is speaking with one of the top Chinese negotiators today in the Oval Office. So we'll see what gets done. If you'll remember, we've been in this truce since December 1st. It's a 90-day truce. And that deadline is quickly approaching. March 1st is about a month away now.
That's true. So people are waiting. See what happens.
Well, yeah, and the more this drags out, the worse it's going to look. On our balance sheet, it's going to hurt our trade, and it's going to hurt the market in general. So we'd like to see them come to some sort of agreement sooner than later, obviously. But the key issues for the U.S. are not getting resolved. This keeps being talked about as a trade war, but the real issues for the U.S. are the internet provider practices and then the technology transfer issues. So
so intellectual property stuff too, right? That the Chinese companies tend to use with abandon and don't really see, I guess, any reasons why they can't take American technology or ideas or music or whatever, or movies, and make copies of them and sell them, and so what?
That's exactly right. I mean, some of their negotiation talks have included a buying spree from the U.S., but that's not really resolving the key issues for the U.S. So
I'm a little offended they haven't bootlegged our show yet, Jason, but maybe they will.
It's coming, yeah.
All right, we'll see.
So yeah, uncertainty with China, so we'll see where that ends up today. Watch the headlines and see what they talked about, and
All right.
and we can go from there.
We will see. What else? The markets?
Sure,
I
yeah,
think they're on the way back up. They're still not maybe where they were last January,
Not
but
quite.
they are
Not quite.
close, right? We're about maybe 2,000 points apart on the Dow Jones.
Yep, that looks about right.
Quick math is working this morning.
No, I think you're about right on. Probably about 5.5% down from where we